All right, so let's dive into something, a myth. I think we've all kind of been sold at some point. It's the Amazon Gold Rush narrative. You know the one. You find a generic garlic press on Alibaba, slap a cool logo on it, ship it to a fulfillment center in Kentucky, and suddenly you're making six figures of passive income from a beach in Bali.
Yeah, it's the ultimate 4-hour work week dream, right? Manifested in real life. It's a beautiful story.
It is. But if you talk to anyone who's actually deep in the trenches of e-commerce today, I mean, people really moving volume, that story feels like it's from a completely different era.
Ancient history.
Exactly. And that is precisely why we're digging into this presentation today. We're looking at a breakdown from AMZ Hacking Live by the channel Euro Deal Genius.
And it's a really fascinating piece of analysis because the speaker isn't just giving you, tactical advice. They're laying out this whole macroeconomic timeline for Amazon.
Right.
The argument is that we're not just in some down cycle. We're watching a fundamental shift in the physics of the entire marketplace.
A shift, yeah. And to get where we're going, this second spring they talk about, we first have to look at the roadmap. The source breaks the last 8 years of Amazon FBA fulfillment by Amazon into 4 very distinct seasons.
We go from the good times into a really chaotic Wild West period, then a brutal hard winter, and, finally to where we are today.
And the big question they're asking is, are the buds finally sprouting? Or is the ground still frozen solid? But here's the part that I want to really get into later because it completely blew my mind. Everyone assumes that AI, artificial intelligence, is the thing that brings the spring.
That's the common wisdom, yeah. AI makes it easier to sell, easier to start, easier for everyone.
But the source suggests the exact opposite.
It just completely flips the script on its head.
It does. It suggests AI is actually the barrier, not the bridge, for new people trying to get in.
Sure.
But, okay, before we get to the robot overlords, we really need to set the scene. We need to talk about the good times. The speaker starts this whole timeline around 2017.
Roughly 2017 to 2019. And if you were in the game back then, you remember it. This was when FBA really, truly hit the mainstream.
Yeah.
The infrastructure was there, Amazon had built up the logistics, customer trust was high, but the saturation just wasn't there yet.
This was the era of launch and they will come. You didn't need a fancy business degree. You just needed what? Decent photos and a product that wasn't complete junk.
Pretty much. And the algorithm was so much friendlier. PPC, the pay-per-click ads, was pennies on the dollar compared to what it is now. You could launch something and actually rank on page 1 organically just by getting a few sales.
It was a land grab. If you staked your claim, you were probably making money.
You likely were. But then the timeline shifts. We hit 2020. And the source calls this period the wild times, or FBA autumn. But honestly, looking at the data, wild feels like a very polite understatement.
Absolute chaos is more like it.
It was a bifurcation event. The pandemic hit, and suddenly you had 2 completely different realities for sellers. If you were selling, say, travel accessories or luggage,
you were dead in the water. Sales just dropped to 0.
But if you were selling bread makers or home gym equipment or, patio furniture, your sales chart just looked like a hockey stick. We saw something like 3 years of e-commerce adoption get compressed into 3 months.
I remember seeing those numbers. I mean, some of these sellers were doing volume they hadn't projected to hit until 2025. But these wild times weren't just about sales. This is when the financial engineering really entered the picture. We have to talk about the aggregators.
The aggregator bubble. This is such a crucial part of the source's analysis. You had these huge investment firms raising billions and billions of dollars, both debt and equity, specifically to go out and buy up Amazon brands.
The logic, I guess, it seemed sound on paper. You buy a bunch of small FBA brands, combine their operations, cut costs, and then sell the whole bundle for a massive profit. A digital Unilever, kind of.
The problem was the timing and the valuations. Because capital was so cheap, interest rates were near 0. They were paying just insane multiples. The speaker calls them sick multiples.
We're talking about valuations that made no sense. They were buying businesses for 5-6 times EBITDA earnings before interest, taxes, depreciation, and amortization.
When those same businesses probably should have sold for 2, maybe 3 times, they were just massively inflating the market.
So you had all these small sellers cashing out with millions, thinking this was the new normal.
But the aggregators, they were buying at the absolute peak of the pandemic demand curve. They were basically betting that everyone would just keep buying bread makers forever.
And then the world reopened.
The world reopened, demand started to normalize, and then you got hit with the supply chain nightmare. The whole bullwhip effect kicked in.
Right, where a tiny shift in consumer demand just causes these massive swings all the way up the supply chain.
Exactly. So retailers panicked and overordered, factories overproduced, and suddenly these aggregators were sitting on massive debt with falling revenue and warehouses just bloated with inventory nobody wanted. The bubble burst. The aggregators stopped buying. A lot of them went bankrupt or had to restructure, and all that easy exit money just evaporated, seemingly overnight.
And that, of course, that just drags us right into what the source calls the hard winter. This is from 2023 to about 2025. And language here is really telling. The speaker uses a German term, Haifischbecken.
A shark tank.
A shark tank. And the theme of this whole era is surviving is the new winning. That's a pretty stark contrast to the passive income dream.
It's a complete 180. The hard winter was defined by, really, a convergence of three big margin killers. First, operational costs. We all remember when sea freight went from $2,000 a container to $20,000.
Oh, I remember.
And even when that came down, domestic shipping and Amazon's own fees just kept climbing and climbing.
Amazon's fee structure got so complex during this time. You had placement fees, storage fees, low inventory fees. It felt like every time you look at a report, there was a new line item just eating away at your margin.
Then the second thing was advertising costs. As all these big brands and aggregators fought over a shrinking market, they just bid up the price of ads. Cost per click, CPCs, they just skyrocketed.
So it costs more to get the product, more to store the product, and more to sell the product.
Which leads to the third factor, competition. All those people who jumped in during the gold rush, they were still there, the market was flooded. And the speaker points out that in this shark tank, you couldn't just have a product anymore, you needed a moat.
I love that concept.
Yeah.
But for Amazon, what does a moat actually look like? Because a patent is, it's hard to get and it's expensive to defend.
A moat in FBA is about being defensive. It's having a unique mold so you're not selling the exact same generic thing as 10 other sellers. It's building a brand that has traffic coming from outside Amazon, like an email list or a big TikTok following.
Ah, so you control the traffic.
You have to. The speaker emphasizes that if your only traffic source was Amazon search, you were vulnerable. You were basically just chumming the shark tank.
So the winter, it essentially killed off the hobbyists. It forced everyone to get serious. If you didn't treat it like a real business with real unit economics, you just froze to death.
That's the assessment. It cleared out the underbrush. Which brings us to today. And the presentation asks the question, is the ground finally thawing? Are we seeing a second spring?
I'm always a sucker for a comeback story. So what does the data say? Because, when I look at the headlines, it feels like e-commerce is still growing, but it's just harder than ever.
The data is surprisingly optimistic, actually, but with some major caveats. The speaker shows this revenue forecast chart from 2014 to 2027. And the line, well, it goes up.
Okay.
Despite the crash, despite the winter, despite inflation, the total amount of money being spent in e-commerce keeps growing.
So the pie is getting bigger.
The pie is getting bigger, the consumer habit is locked in, but the ingredients to make that pie are just a lot more expensive. And there's another factor the speaker points to as the biggest threat to this second spring, the elephant in the room.
Or maybe the dragon in the room. We have to be talking about Temu.
Temu. You just can't have a conversation about e-commerce right now without talking about them.
They have completely upended the low end of the market. It's the ultimate race to the bottom on price.
It's a totally different model. Amazon FBA is about storing things locally for fast delivery. Temu is factory direct, slower shipping, but just rock bottom prices.
Yeah.
And the source material shows this split sentiment among sellers. Some are absolutely terrified. They see Temu just stealing all their sales on cheap, commoditized goods.
Well, yeah, if you're selling generic silicone spatulas, Temu destroys you. You can't compete with factory direct pricing when you're paying all of Amazon's fees. The math just doesn't work.
It doesn't. But the other half of sellers are, for the most part, ignoring it. And the speaker kind of aligns with this view. They point out that Amazon still controls this massive chunk of the trusted retail market, about 1/6 of total retail in its core markets.
It comes down to trust and speed, right? I might buy some cheap gadget on Temu, but if I need something tomorrow, or I need to know it's not going to break, or I want easy returns, I'm still going to Amazon.
That is the best chance argument the speaker makes. Amazon is still the premium infrastructure, but, and this is the big pivot point of the whole presentation, the way you win on this premium infrastructure has fundamentally changed, and this is where we have to talk about AI.
Okay, so this brings us to the AI paradox. And this, for me, this was the part that was just completely mind-blowing. Because when ChatGPT dropped in late 2022, right in the middle of that hard winter, the immediate reaction from everyone was, great, now anyone can write a great listing. The barrier to entry is gone.
That was the assumption, the democratization of competence. Everyone thought the playing field was being leveled. But the source argues that AI has actually widened the gap between the pros and the amateurs.
Walk me through that. Why didn't it make it easier for the little guy?
Okay, so think about it in terms of a floor and a ceiling. Before AI, a newbie might write a bad listing, and a pro would write a good one. The gap was there, but it was manageable.
Right.
Now, a newbie goes to ChatGPT and says, write me a listing for a garlic press. And it spits out a decent, readable, generic listing.
So the floor has been raised. The baseline quality is much better now.
The floor shot way up, but the ceiling went into the stratosphere. Because the professional seller, they aren't just chatting with a bot. They're using API integrations to analyze 10,000 competitor reviews, extract the exact keywords that drive sales, and programmatically generate copy that hits every psychological trigger.
And they're doing that at a massive scale.
Exactly. They're using AI to generate lifestyle photos that would have cost $5,000 in a studio shoot. They're using it to analyze their profit and loss statements in real time.
So while the new guy is saving 30 minutes writing one description, the pro is using AI to leverage all of their existing assets, their data, their team, their capital, to become hyper-efficient.
That's the key. AI is a multiplier. And if you multiply 0 assets by AI, you still have basically nothing. But if you multiply a robust business by AI, you get exponential growth. The optimization level of the whole marketplace just spiked.
That makes so much sense. And it aligns with the stat the speaker mentioned, that the demand for new Amazon seller accounts actually dropped last year.
That did.
The gold rush crowd took one look and said, wait a minute, this looks like actual hard work.
The get-rich-quick appeal just faded because the complexity was suddenly visible. And this all leads to the speaker's core metaphor for this new era, the white canvas.
I really like this analogy. The idea is that AI gives everyone the same paints and the same brushes. We all have access to Midjourney or OpenAI. The canvas is blank. But just having the brush doesn't make you Picasso.
It matters who is holding the brush, and this defines the new successful seller. The speaker draws this really hard line between the clicker and the architect.
Let's break those down, because I think this applies to so much more than just Amazon. The clicker is the old way of doing things.
The clicker is the executioner. In the old days, you could make a living just by knowing which buttons to push in Amazon's system, or you hired a team of virtual assistants who just followed a checklist. Log in, check inventory, adjust bid, log out.
It was manual labor, just, digital. You were getting paid because the interface had friction.
And the speaker is really clear on this. Clicks are not a lever anymore because AI can click. AI agents can follow that checklist faster, more accurately, and 24/7. If your whole value is that you know how to manually set up an ad campaign, you are becoming obsolete.
So the clicker is replaced by the architect. What does the architect do that's different?
The architect builds the systems. They don't do the work, they design the workflow. The speaker shares this really personal story about studying business informatics. And they admitted, look, I couldn't really code and I didn't really understand business. They were stuck in the middle.
I think a lot of people feel like that. You know just enough to be dangerous, but you're not a developer. And you're not a CEO.
But in this new AI era, that middle ground is actually the high ground because the architect uses AI to bridge that gap. You don't need to write the Python script to automate your inventory ordering anymore. You just need to know that inventory ordering should be automated.
And you need to know how to ask the AI to write that script for you.
Exactly. You need to understand the structure.
It's more than just prompt engineering. It's like strategic inquiry. The speaker made a great point that there are no stupid questions with AI. You can just keep drilling down until you understand.
Right. You can ask the AI, explain this code to me like I'm 5, or why is this API connection failing? The barrier isn't technical knowledge anymore. The barrier is strategic vision. Can you see how all the pieces are supposed to fit together?
So the architect's the one connecting the dots. They're building these bridges between data, marketing, and logistics, and just using AI as the construction crew.
Precisely.
Yeah.
And this leads to what they call tool agnosticism. It used to be sellers with tools versus sellers without. Now everyone has the tools. We're entering an era of sellers with damn good tools.
If everyone has a superweapon, the only advantage left is strategy.
That's a stark way to put it, but yeah. If execution becomes a commodity, if the how is basically free, then the what and the why become the only things of value.
It's interesting. We started this whole deep dive talking about a gold rush. And you know the old saying, in a gold rush, sell shovels.
Right.
But in this new AI gold rush, everyone gets a free shovel. The value isn't in the shovel anymore. It's in knowing exactly where to dig.
And knowing how to build a mine that won't collapse when the next winter comes. Because as we saw with the aggregators and the supply chain crisis, winter always comes back around.
So bringing this all back to the second spring, this isn't a spring for everybody. It's not for the passive income seeker.
No. It's a spring for the professional. The barrier to entry has shifted from capital just, buying stock to competence building intelligent systems. The gold rush is over, but the business building era is just getting started.
It's moving from a resource extraction mindset to an engineering mindset.
And that's probably a healthier place for the market to be long term. It means better products for you, the consumer, and more sustainable businesses for the sellers who can adapt.
That is a lesson that applies way beyond Amazon. Whether you're in marketing or finance or coding, we're all facing this shift. The clickers in every industry are being threatened by AI. The architects are the ones who are going to thrive.
It's the universal shift of our time. We're moving from an economy of execution to an economy of orchestration.
So the provocative thought I want to leave you with is this. Look at your own job. Look at your own business. Are you a clicker? Are you getting paid for tasks that an AI agent will probably be able to do next year? Or are you the architect? Are you designing the system that the AI will work within?
That's the question that determines whether you get to see a second spring or if you're just facing a very, very long winter.
Heavy stuff to think about. But that's why we do the deep dive. Thanks for guiding us through the seasons today.
Anytime. Until next time.